The truth is ever to be found in simplicity and not in the multiplicity and confusion of things. Sir Isaac Newton. My friends, we look for truth. Truth for us is accurately following price movement. That is the truth we seek, to see the direction and to follow it. How do we do that? Well, we keep it simple. We use the Heikin-Ashi candlesticks, we use trend lines, and we use volume on 3 charts. Our weekly chart, which is the longest, the intermediate chart, which is the 2-day, and our shortest chart, which is the half-day, or 195 minutes, because the market is open from 9:30 until 4 p.m. on an average market day. Occasionally on holidays, might close down early at 1, but typically that's 195 minutes is a half day. That's why our chart is unlike some other charts you see where it's 4 hours. It's not open 8 hours, so that doesn't make for an accurate chart. Again, we seek accuracy here. Let's jump into these charts. We see bonds and stocks, our 2 stock indexes, are up for the day. Gold and Bitcoin are down. Now, overall, we're still in a down move on these charts. Going into the 3rd week, where we just finished the 3rd week, we look at where we are on our 2-day chart. Now, this is the S&P 500 that I'm talking about, always over here. And we go in the order of the S&P, the NASDAQ 100, 20-year bonds, gold, and Bitcoin. What do we see going on here is we see the low for this week is $435. Last week, $433. Now, we've not hit that low from last week. We do have a red down candle. We do have a downtrend. We can see on the 2-day chart 2 spinning tops right now, maybe a doji here, then this closer to a spinning top. We see the volume's pretty decent. It's over half. It looks like we're only halfway through this 2-day candle, because you can see right here, it started on Friday. Again, it will finish drawing on Monday. When we look, we can see where we started off in this move. Things moved down 1.62%. We checked out, took a profit on our first half of the trade, let the rest of it ride, went a little lower, ticked up, and then over the last day and a half, we see we're bounced off the weekly trend line on this half-day chart, moving down. 2-day is below it. So again, we're waiting to see how this next week goes. Will it continue this downtrend? You can see all this volume right here, so we will keep an eye. We've been average volume now going on 4 weeks. So we'll see how things continue to progress over the course of this next week. You can see we're still in the green. So hopefully we'll see this continue to play out in a down move. Now, those of you new, you may say, why is anybody buying the S&P 500 when it's going down? We're not doing that in our practice trade. What we're actually in is SH, and that is the inverse fund of the S&P 500. It is going up. Now, certain things you need to know about inverse funds. They have higher fees, they're revalued more often, and they can work when you're going in the right direction, but there's certain benefits and certain negatives to them. So you need to practice trade them to make sure you understand how they work. That's what we talk about here over and over. In fact, I'm going to put it in today's video at the very end, our training on inverse funds, how to make money when markets crash. If you don't know a lot about inverse funds, this will help you. Now, let's move on to the NASDAQ 100. Ended up with a spinning top this week. You can see all the up movement there. I can blow this up for you. See, though, this wick on top, and you can see where it penetrated the weekly trend line. So much more volatility here and weakness in the NASDAQ 100 as opposed to the S&P 500. We look at where we are on the 2-day. Boy, you can see on that prior 2-day candle, super high volume. It did try to peak up, but failed. And on this latest 2-day candle, it has moved right there. Well, I guess it just sort of continued to slide sideways. It's sitting right there on that 2-day. On the 2-day chart, it's sitting on the weekly trend line. Remember, the trend lines are always weekly chart. But the 2-day chart and the half-day chart help us to see where that weekly trend line is in comparison to these smaller charts, which just helps us see a little more in depth. You look at the spinning top and you don't fully understand what it means until you're able to look at these smaller charts and you can see where it seesawed up and down. That's why you have a wick on top and a wick on the bottom. So we have ended the week below. We went a little above it, back onto it, and then below it on that half-day chart. So again, moving in the right direction for the day. The S&P was up 0.70, NASDAQ 0.78. So we'll continue to watch, wait and see how this trade continues to work out over the rest of this week. We're still in the green there as far as where we are on, well, we're right there at break even, it looks like. Well, we touched at break even in the afternoon. I guess we ended at, excuse me, 64.02. So again, we're still in the green just a little bit. So we'll keep an eye on it as the week starts and progresses. What about 20-year bonds? We are negative on that. We're in the inverse fund for 20-year bonds too. On our practice trade, what do we see? We can see where things have pushed through, up 0.33% on the half-day chart. Not so on the 2-day yet, although it is the second green up candle forming. We did hit a lower low this week, though, and we have these nice stair steps going down on the weekly chart. And look at all this volume. So again, we'll see how things continue over the course of this next week, but still in that trade too. What about gold? Gold was down a little bit, 0.13%. We can see where it ran up to it and then moved back over on the half-day chart. 2-day chart is trying to push through it. We are in the red on gold. We didn't quite get a profit here. Gold didn't drop low enough to knock us out on our 1.48% down trade. So we're still just keeping an eye on gold. Of course, you could have pulled the trigger to get out and break even. When it hit that would have happened, oh gosh, back on Wednesday afternoon or Thursday morning. But we're still in the trade to see which way gold is going to go. Haven't hit our must-get out point yet, which is here at what, $180 and something cents. So keeping a close eye on gold. Lastly, Bitcoin back down again today. And again, just sort of still hanging out here around that 25.12, 25.20 mark, something like that. So again, hoping to see Bitcoin pull back quite a bit, reset, so that when it does start to go up again, we want to have a clean green for an up move. What we keep hoping for. We'll wait, watch, and see. By the way, I will be releasing for everyone. We released earlier in the week charting cryptos, commodities, and currencies. I'll be releasing that as soon as I finish the recording here for today. I'll release that to the general public. So look for that. Listen and watch that also. And like I said at the end of today's video, I'm going to have those inverse fund training, that inverse fund training for you. My friends, we always love to hear from you. Don't hesitate to reach out to us, cw@chartingwealth.com. If you're not a Patreon supporter, you appreciate what we do, join, because the first thing you're going to get is what? Options Made Simple, the Charting Wealth Way, that 3-part series. If you want to know something about options, want to learn how to start practice trading them, that's a great way to start. God bless, my friends. All the best from the whole team, before I lose my voice, from the whole team here at Charting Wealth World Headquarters. Take care.